Hi everyone, this is Malcolm with Marble Fox Studios. Here at Marble Fox Studios, we enrich digital experiences by helping consumers become better cyber citizens. Just to let you know, I am not a financial advisor and I am not here to provide any financial advice. I'm just here to provide information and you can make decisions on your own. Today, wanted to cover what's going on with stock AMC, and the biggest piece of news that I found today comes from the National Law Review. The headline is that the SEC brings a naked short selling case. Let's dive into this. First of all, the National Law Review was established in 1888 and out of Chicago, so they've been around for over 100 years. I would assume that they are fairly trustworthy, and most of everything I read in the article was really informational. Didn't find any bias there. So it's a pretty short article as well. I'd say probably about probably a 5 to 7 minute read if you're interested. I will be tweeting out my talking points on this as well with a link to the article after this video has been posted. The SEC has charged a broker-dealer with naked short selling. The date of the charge was on May 19th of 2021, so last month, a couple weeks ago. And something important to note here is that the broker-dealer mismarked 96% of a certain hedge fund short sale orders of two separate issuer stock as long or short exempt. That's straight up fraud. That's huge. Because there's no other reason for them to do that other than they're just trying to cover themselves. And it's not only a small number, but 96% of their short sales were marked as not short sales. So something's definitely going on there. The broker-dealer is contesting, and an important thing to note down here is that the broker-dealer has not made its position clear yet, but it is contesting the SEC's complaint. The SEC is seeking an injunction, which is fancy word for a warning, a disgorgement, which is removal or confiscation of $1.6 million in fees, and that $1.6 million is the estimated profit that they made from brokerage fees that were avoided, and then civil penalties. And civil penalties are likely a small fine of a few $10,000, so not very big. Which, all that combined, this is essentially a slap on the wrist. The SEC, based on this, isn't serious about sending a message. This, in my mind, is just the SEC being able to say oh yeah, we did something, we did some work, but it's not enough. Not enough to make this a fair market. So that's the big article out today. Let's move on to technical analysis. All right. So here we are looking at AMC on the day chart. I've got this pulled all the way back to the January low of $1.91. All the way up to today. Just so for future videos, what we are looking at is this red line is the top side trajectory of the initial gamma squeeze that we saw in January from the top of its low to the top of its high at that point. And then this second thicker red line is the top of the low that we saw in April to the new all-time high that we saw just last week. And something that is worthy to note is that for a good while, these red lines of a topside trajectory run pretty parallel, and they will for a good while. And then on these green lines, you can see that we have a fan that's spreading out and this shows an exponential move in growth. So that's something to watch out for. That our trajectory will likely increase on the support side. So I have the red set as resistance trajectory, stuff to break, and then the green is support trajectory, and the closer that the line is to what we're currently working towards, the thicker it is. So this red line is thicker than this one because this one happened farther back. This one happened more recently. And like this trajectory is the most recent trajectory that we're on. And so it's the most relevant and probably has the strongest support. If we do end up breaking through it, it'll probably just fall back to this trajectory, to this support trajectory, and they get thinner as you go back because they are older. They're just older trajectories. So let's bring that down so you can kind of see where these lines intersect. So, come on. So if we put the pointer over here, sometime around June 9th, June 10th is when our current trajectory is set to cross the current resistance trajectory, and when that happens, I'm predicting that we will probably very quickly meet the older resistance trajectory here. And as you can see, that would currently be around end of June. But I'm pretty sure that if we hit this, that it will make our trajectory go up even faster, and we might be hitting somewhere in the upper 100s very, very soon. Definitely this month, if we continue on this current trajectory. It is always possible that we could fall out of this trajectory and move back onto older support trajectories. That's always a possibility, so keep that in mind. With that said, let's get into what's happened recently. So let me go to the 15-minute chart. Turn on auto here. All right, so everything that we've been doing for the past 2 trading days has stayed within the range of where we traded all day on June 3rd. So what we're going to do here is we're going to run a Fibonacci retracement and a Fibonacci extension to get our zones of support and zones of resistance. So let me move this to the 1 minute so we can get a very accurate reading on this. So June 3rd, here we go. So let me choose Fibonacci retracement, and we're going to draw this from the intraday low on the 3rd, 37.66, to the intraday high of 68.80. Make sure, there we go. And since Fibonacci retracement signifies zones of mostly when we're going down, which would signify these are floors of resistance that the bears would have to break through. So I'm going to color code this. I'm going to color code this green, and we are going to make this dotted. And now let's run a Fibonacci extension. And the Fibonacci extension is the same thing. We run from the intraday low up to the intraday high, down to the point where bearish resistance, or where bearish momentum was stopped, which was sometime in the after hours on the 3rd. So let me make sure I've got those right on point. 25.59, zoom into that. Yep, that's in the right spot. And 37.66, move this one candle over. All right, and now the Fibonacci extension will signify essentially ceilings of resistance that we will have to break through. So I'm going to make this red, make it dashed. So now let's move back to the 15-minute chart. Here we go. All right, so let's just get today into view. So today we mostly stayed inside of this channel. We had a few false breakouts through resistance, and then also a false breakout through support. And what's really interesting, what I find really interesting is because Thursday was so volatile, we had a violent move upward and then it followed by a really violent move downward, that the Fibonacci levels of retracement and extension, a lot of them track together. So what we are watching for is these really strong zones that it's going to take a lot of volume for us to either break through it, or a lot of volume for the bears to break under it and keep that momentum going. So let's mark these out with horizontal lines. So we got, I would say this is close here, so we'll put this right in between. We will put another one right here, around 53.08. And another one around 57, probably 57.20-ish area. Another one here around 61.38. And then it looks like our final one will be somewhere around the 70s, 69.50. Yeah, so let's stick with those. And now that we have those drawn out for us, we can clean this up by getting rid of our Fibonacci extension and retracement, and now we have our clean. I'm going to leave these purple since it's a nice neutral color, but let me make these dotted here. Make them dotted. And I'll also make them thicker so they're a bit easier to see. Nope, I don't want to change the color. Just that. So these are roundabout price points, not exact price points. These are just roundabout price points where we can expect a lot of support and resistance in those same zones. And so once again, to either break through or break below and stay in those new zones, it's likely going to take a lot of volume. But let's take a look at what we've got right now. So if we were to stay on this new trajectory, which was established on Friday in the after hours, and we respected this through the remainder of today. It looks like probably sometime in the pre-market tomorrow, personally, what I think is going to happen, because you don't get a whole lot of volume typically inside of pre-market, I think that we are going to bounce off of this 57.20 area, probably back down to the 53 level, and we'll probably keep bouncing inside of this channel until market open. And so this we'll probably have a breakout of this, is what I'm guessing. But once the market opens and we're able to get that volume, the trend will likely make it want to bust through this resistance, and the price will want to go up to this line. Think of this line as a magnet. It pulls the price down towards it, but it also pulls the price up with it if it's underneath it. So I'm thinking we could probably see a violent move upward in the morning up to the 61.38 range. And if it continues to respect this an ascending level of support, we also might see a really violent move right through this wall. And if we see that too, really quickly, we could see ourselves up to 69.54. I'm guessing we will have a false breakout above it, and then come back down and consolidate, and everything will probably end out the day where the ascending level of support meets this top level of resistance / support. So that's what I'm thinking could happen tomorrow, but anything could happen, because that's just if everything would track normally. If we have any sort of news catalyst, you can throw this entire thing out the window. This is essentially just drawing with digital crayons, so it's fun to think about and see what we can anticipate. But that is my technical analysis for AMC today. So thanks for watching, everyone, and we'll see you in the markets tomorrow.